In this video, I'm going to help you to understand 10 different SMC terms you often hear smart money concept traders mention. If you're new to the smart money concept, this is going to be very handy because these terms are often mentioned. Some of them you don't even know their meaning. So these are the terms right here. I have 1 to 10, from point of interest to price action, which generally most of you have heard in the market. So let's start with the first one, point of interest. Point of interest is basically areas or locations on your chart that when price reaches there, you expect to see some reaction. This can be an order block, can be a fair value gap, which I will subsequently tell you. You can see this level. If we are looking at this place, this is a fair value gap, this particular place, and we can call it our point of interest. That is where we basically want to see price reach, and we expect to see some reaction. So anyway, it can be a support level, it can be a resistance level. This is basically an order block. Let me just make it right here. This is a bullish order block. It can be your point of interest. So basically, point of interest is where you want to see price reach and you expect to see some reaction. The next one is an order block. We have two types of order block. We have a bullish order block and a bearish order block. What exactly is a bullish order block? Like I've mentioned in this particular place, you can see this is a downtrend, and the last red candle I marked right here, let me just make it more visible so you can see. This last candle I marked with this color. If you are using this color depiction, I use this green for a bullish candle and red for a bearish candle. It depends on what color of candle you're using. So the last sell candle here that price completely engulf is known as your bullish order block, because it is this candle that creates the movement in the other direction. An order block, a block in finance, simply means a very huge transaction, and this transaction is mostly done by the institutions that have large money, a large transaction. So this particular one is your order block in simple term, a bullish order block. A bearish order block is basically the opposite of a bullish order block. This is a bearish order block. This green candle, if you are seeing it, let me just make it more visible for you to see. This one is a bearish order block. So it is the last green candle that created the movement downward. You can see that the red candle has completely engulfed it. This one, the green candle, has completely engulfed it. There is more to order block. You can check my YouTube channel right here. I have beginner videos that can help you. So make sure you watch all the videos on ICT and smart money concept. You simply come to playlist, you're going to see them right here. Smart money concept. So coming back to the next item right here is fair value gap. Fair value gap, I've mentioned about fair value gap time and again, but let me go ahead and mention that right here. You can see when you have a 3 candle price action like this one, and this one in this regard. Let me show you that in a simple term. Can you see the wick of this candle? That's basically the tail. If you pick your line from here and put it at the wick, and then this one in a 3 candle price action, assuming you're counting 1, 2, 3, you want to see the wick of this candle and the wick of this candle create a gap. They are not connected. What I mean by connected is simply this one. Can you see this wick and then this wick? If you're counting 1, 2, 3, they have actually connected. They have traded through each other. So this is a healthy price action. We don't have a gap or imbalance there. An imbalance is basically when you see this gap in between. So that is a fair value gap. And what is the importance of fair value gap? It gives us an assurance sometimes that price is coming back to correct the imbalance. As the word implies, it is called imbalance. Every imbalance must be balanced. It must create a healthy price action. So price is coming back into that fair value gap, as you can see right here. Why is it not trading into this place? Because this place has a healthy price action. That is simply what that means. So as price comes back, this is a fair value gap. The next one is break of structure. Let me show you what a break of structure means. Just like the name implies, break of structure simply means a structure is broken. And what that means is that price moves in a specific way, an uptrend, downtrend, and a consolidation market. An uptrend is basically a series of higher highs and higher lows. For example, what we see right here, from here to here, market has created a higher high. This is a higher high. As it comes down, it creates a higher low. at this point. From this level, we want to see market push up above the last high that was formed. So in identifying a structure, this is a structure from here to here. That is a structure. So when you're identifying a structure, you're identifying from this wick to the topmost wick. So that is how you identify a structure. So if you want to say that the structure is broken, you simply want to see that this high has been taken out. Let me make this more visible so you can see. If you see this high being taken out, you can simply say that you have broken structure. And then how do you know that you have broken structure? You have broken structure when you see that the bodies of the candle here have broken outside the high. If it is just the tail or the wick, it is not a break of structure. Get this, if it is just the tail or the wick, it is not a break of structure. So this, you can see, is called break of structure or market shift. It is all the same. Likewise here, you can see you have a break of structure. The highest wick here, if you put it right there, you can see that the bodies of the candle have traded outside it. That is a break of structure. So this is what break of structure simply means. And then the next one is change of character. Change of character is the same thing with a break of structure, but this time around it's just a coin term to show you that there is a shift in market direction. For instance, if we are dealing with an uptrend, at a point where we see market giving us a downtrend, that is what we call a change of character. For instance, right here, let me show you. We have an uptrend that started from here, a higher low, higher high, higher low, higher high, higher low, higher high, higher low. So at this point, the last higher low that was formed, we did not see any higher high. For us to continue with this trend, we want to see a higher high. But at this point, just here, we have seen this higher low has been taken out, and then market have turned the direction to a downtrend. Can you see? Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So at this point that we have a shift in market direction is what we call change of character, from an uptrend to a downtrend. Then we talk about relative equal highs and relative equal lows. Those are areas that you basically see price action. Let me show you equal highs and equal lows. If I see any right here that I can show you. So if you are here, can you see this level? Basically, it's just relative equal highs. If I take this line, you're going to see it. It's not exactly equal, but we call it relative equal highs. At this point where you see, it's not perfect, but I will check and see if I can see anyone that is perfect. For example, so I have seen one here, right here. Let me show you.